Hey everyone, Walmart stock has been on a tear lately, and this is uncharacteristic for this seemingly boring stock. It has a reputation for just being a very boring company that grows very slowly, but in recent quarters, the stock price is roaring. So a lot of investors are curious about what's going on Walmart stock. So I'll dig a little deeper here and try and understand why the stock is experiencing this kind of momentum of late. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, Walmart CEO Douglas McMillon saying that the momentum in the business they see is driven by growth in units sold and transaction counts, as well as market share gains, including general merchandise. These are not inflation-driven results. In other words, people are shopping at Walmart more often, they're buying more things when they go to Walmart, and they're switching over from other places to Walmart. Now, this is the general theme across the economy. People are looking to make their dollars stretch as inflation has ravaged economies worldwide. People have to pay more for rent, for fuel, for everyday essentials, for medical care, for transportation. Everything has gotten more expensive, so consumers are looking for ways to spend less per item to get more bang for their buck. And Walmart, being the low-cost provider, has a reputation for decades of offering low prices. So consumers are flocking to Walmart looking to save money, and this is not going to end anytime soon. Inflation is still very high. It's the rate of growth is slowing down, but it's not going backwards. You're not getting back to levels in 2019. What you are getting is the price increases are slowing down. So instead of increasing by 5% year over year, it's only increasing by 2.5% or 3.5% year over year. It's still increasing, and it's still much higher than it was in 2019. So consumers are getting that sticker shock and saying, maybe I don't want to take this trip, or maybe I don't want to eat out as often as I used to now that seemingly every restaurant has raised prices meaningfully. So Walmart is benefiting from that trend. And you could see it in Walmart's stock price up to $64.73, record high for the company. That's up from just under $40 per share around July of 2022. Remember, in 2022, the stock price took a major dip here. You'll notice that was when the economic reopening really gained momentum and people shifted their spending behavior. Instead of spending more money on things, people started to spend more money away from home, on travel, on concerts, on theme parks, on restaurants and bars. And that was bad news for Walmart because Walmart sells things. Walmart benefited during the earlier stages of the pandemic because people couldn't spend money on those away from home experiences, and they were spending more money at places like Walmart. So now that trend is reversing. The price for travel, theme parks, concerts, all of which has gotten prohibitively expensive, and we're starting to see cracks in that away from home trend. I predicted earlier this year that 2024 would be the final year of that unleashing of consumer demand for away from home experience. I predicted this would be the final summer season where demand for travel would be much higher than the previous year. Starting in 2025, I suspect consumers will retrench, look to save money, eat out less often, spend more time at home watching Netflix instead of entertaining away from home at concerts and theme parks, etc., because the price has increased by so much and consumer incomes have not kept pace. And so budgets are constrained now. All of those stimulus benefits that people got during the earlier stages of the pandemic, they've worked through most of that, and now they have to retrench. And so Walmart is benefiting from that trend. They're also saying that in the US, Sales inflation was only about 40 basis points, including mid-single-digit deflation in general merchandise. That's right, prices going down. But this is for general merchandise, things like board games and TVs and remote controls, things like that. But for essentials like food and consumables, they saw low single-digit inflation. So necessities, the price of necessities are still increasing, while the price of those non-essentials like TVs, board games, gaming consoles, computers, things of that nature, the prices are now going backwards because people, like I mentioned, were spending more money away from home. But this inflation in things like food and consumables and rent and fuel, that leaves less money in consumer budgets, right? If you think about your budget, you get a certain amount of income every month. Let's say you make $4,000 per month. Now, you've got to start by making sure you pay all of your essentials, right? That's rent, that's your utility bills, your cell phone bill, your car payment, etc., right? You've got all those essentials. And only after you pay all of those essentials will you have any money left over for disposable income, spending on things that are not necessary. Things like buying a board game, maybe, things like buying a new TV, those types of things you don't have as much money for now because you're spending so much on your essentials. Rent is up significantly from 2019. Fuel prices are up significantly since 2019. Car prices have absolutely exploded since 2019. Utility bills are higher, cell phone bills are higher, etc., etc. So the consumer budget is being allocated more towards, a larger percentage of the consumer budget is being allocated more towards essentials, and less is available for non-essentials. And in this type of environment, Walmart benefits because now that consumers feel stretched and they see that their money is running out sooner, they still want to do fun things. And so in order to create money to do fun things, they need to find a way to lower the spending on essentials. And that's where Walmart comes in. Walmart offers lower prices, and they have a reputation for offering lower prices. So now consumers are saying, let's look at Walmart. Instead of going to maybe Ross or TJ Maxx to shop for clothing, let's go to Walmart. Let's look if they have that t-shirt first before we go to Ross. Let's look if Walmart has that jacket before we go to Ross or TJ Maxx. And certainly before we go to Macy's or Nordstrom's, which are much higher priced, right? So this is where Walmart is noticing that bigger benefit, and this is where Walmart is experiencing an increase in traffic and people buying more things there, and the stock price is reflecting that. As investors realize that Walmart's going to benefit in this trend, and this trend is only getting started. Consumer budgets are only beginning to tighten now after a couple of years of being plentiful, being flush with cash. After all of that stimulus, we're just now beginning to see the after effects of all that stimulus, which is inflation, which is lower cost of living. Which is lower quality of living because you're paying so much more for essentials. You don't have as much money left over to do fun stuff, to take vacations, etc. So this is the reasons why Walmart is benefiting and why Walmart stock is exploding to the upside. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.